Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I take this opportunity to wish everyone a very happy new year because this is the first webinar I'm presenting in the new year 2014. So I'll be giving the forecast for this week, 6th to 10th of January. I was supposed to give the webinar yesterday and I was not available. So I'm giving it on 7th January, the forecast for this particular week, which is derived based on a statistical algorithm. And also I'll fine-tune it with the help of the market reading technique. I'll explain how it can be fine-tuned. And in order to avoid undue risk, we will use the trading strategy during this particular time frame. As I explained in my earlier webinar, which was given on 30th, that market is expected to make very big volatile moves during the yearly trend reversal time. The yearly trend reversal time will be from December to January. So December of last year and January of this year, we are bound to see very quick up and down moves in the market. And this is being done by the other players in order to earn as much as possible, even though many think that the market might be thin volume and things like that. But still, the players will try to take the maximum advantage by making whipsaw moves in the market from time to time. So you know that week beginning, they try to make subdued moves. Yesterday they had done it, and they just made the dip from the Friday close and then started gaining small levels in the case of Euro and GBP, and also made a small drop in the case of USD Yen, and they are holding all those pairs. And they are expected to continue to gain the levels in this week because this week is full of action. And you know that the prime data are to be released in this week, Wednesday about the FOMC minutes, and Thursday the interest rate decisions from BOE and ECB, and also the press conference. Then subsequently the non-farm payroll for the weekend. So the players will try to make some extended stop and moves during that particular time frame. So don't simply relate the data released to the other market, and they may pretend as if the market is reacting to that of the data, but they will try to make the moves in their fancy or depending upon the pending positions of the traders and try to earn as much as possible during such data release time. So we need to understand that during the yearly trend reversals, we cannot do position trade, we can only do swing trades. And the trading strategy becomes very vital. And if hedging facility is available in your trading platform, try to see that you use the hedging order 30 pips away from the other market once a position is taken, and then try to keep stop at entry in order to eliminate the risk. So these two steps are very vital. Then subsequently aim for about 45 to 75 pips profit in your trade. And you will be getting the either way trading opportunities in the market. And what you need to do is find out whether the market is closer to that of the low or closer to that of the high. If they are near that of the high, and stop cutting the new high for more than 30 minutes during the early or the late sessions. So these conditions are very important. Not any time of the day. If they are near the high or near the low, during the early or the late part of a session, we can take sell position near that of the high and buy position near that of the low, so that within the session, we should be able to book profit. So that you need to understand. So my forecast has to be used in line with that of the session timings. Then you will find that it is really giving an advantage for you to take trading decisions. Now let me explain to you what is expected in this week. And it is the first week. of the new year 2014, 6th to 10th of January. And we have already seen 6th January move, and they started making the swing and rise, and also the slide during the European session made the downward stop and then started gaining the levels during the US sessions. Then today is 7th of January. They are expected to make the swing and rise moves during the Japanese session. Then a small dip during that of the European session start as a downward stop, and already they are doing it in the case of GBP. And then afterwards they are expected to make a quick rise. And always you know that they will try to make a pretension. That is, pretend as if they are going to dip and then rise. Pretend as if they are going to rise and then drop. But how to differentiate the pretension from that of their genuine move? The pretension will be always a quick move. So whenever there is a quick move, above that of the high or below that of the high, try to identify whether it is a stop and or an extended move or an intentional move. If it is stop and extended move, they will be very quick. Then we need to wait for 30 minutes to 2 hours in order to take the positions. But if it is an intentional move, it will be always a slow move. They will try to cut the high and stay above the high for more than 30 minutes and then slowly cut the new high every 30 minutes. Then it is an intentional move. And slow moves, don't try to trade against. But the quick moves, we can try to take the counter trade. Then they are expected to make the swing and quick rise moves during the US session today. And tomorrow they are expected to make a dip during start of the day and then rise during the Japanese session. And then swing and rise could be seen during the European session. And swing and quick rise could be seen during the US session. The rise could be very prominent after that of the FOMC meeting minutes. Then on Thursday, you know that the prime data release with regard to BOE and ECB, the interest rate decisions, not much of a change is expected. Still, the players will try to use it as a market trigger time. And so they will try to make a dip during start of the day and then gain or rise levels. And again during the European session, a dip and then rise. And swing and rise could be seen during the US session. Then everybody will say that, okay, now the European data is out. Now what about US data? So on 10th of January, they will make the subdued moves during the Japanese session, just the swings without breaching the high or the low. The narrow range swings could be seen. And then they will try to make a drop during start of the European session as if they come to know about non-farm payroll beforehand and then start gaining the levels. Then afterwards, little bit of volatile moves could be seen during the US session. And when non-farm payroll is to be announced around 13:30 GMT, they are expected to gain the levels quickly, then make a little bit of volatile moves during the US session, pretend as if it is going to fall, and then later on they are expected to gain the levels. But that gain is not going to be sustained. They are expected to gain the levels on Friday close, and again they will try to make the volatile moves during that of the next week, 13th to 17th of January, and we could come across big drops happening in the market. That is especially Euro and GBP. At that time, USDN is expected to gain considerably. So before that, they are expected to make the drop in the case of USDN as a trigger for Euro and GBP to gain the levels. You know that last week I was giving that forecast that on 30th and 31st, they will gain the levels. Then from 1st onwards, 1st happened to be a holiday in platforms, so not much of activity was seen. And on 2nd and 3rd, Thursday and Friday, they made a big drop. So they have taken longer time to gain the levels and shorter time to drop. Then again, Monday, this week, they are expected to gain the levels. So slowly they will gain the levels for all the data release time, and then next week the opposite, they will try to do it in a big way, Because when the traders get convinced, okay, the fundamental data are out, so the market is in the uptrend, so we can do freely buy and sell trade, but the players are here to trap them. So they will try to drop the market next week, and similar to that of last week, and then induce the traders to liquidate the long positions. So alternatively, they will try to trap the short sellers and the long holders. And I given the forecast this year. The market is going to be very volatile. So I'll come to the page and explain to you more about it, because last time I was not having sufficient time to explain in detail. Now with regard to the range or the levels. So the range is going to be very similar to that of last week. So from that 1.3850 area, they came down to 1.36. And yesterday they showed the low 1.3572 and then started gaining the levels, holding above the 1.36 now. And slowly they are expected to gain about 200 to 250 pips during this week. And in the case of Australia, in the case of JPP, they come down to that level of 1.6338 and probably, if needed, during downward stopping, they may make a quick extended downward stopping before making a rise above that 1.6465 level. And you know that GBP is the currency, they use it in order to create the market sentiment. So they could do the extended downward stopping and try to reach 1.6250 area around that, and then start gaining very quickly and go above the initial high and upward move. And that is the part of the game. So we have to accept it. So my humble suggestion will be that traders could wait for quick moves to happen in the market. And when they quickly gain the level, stop cutting the new high for more than 30 minutes, they sell. When they quickly drop and stop cutting the new low for more than 30 minutes, you try to take a buy and use the hedging order to limit the risk. You should be in a position to earn very quickly during every session of the day. And similarly, USD yen also, they will try to use it in order to create the market sentiment. And so they will try to, they have gone up to that of 104.95 and they may make an upward stop before making a drop to 102.58. So that way they will try to make the wide range swings in all the three majors. Then in the case of USD CHF, will come across slow gaining move from the 0.88, they gained up to 90, and they are expected to gain it up to 92 area. Slowly they will gain, and it may appear that USD CHF is moving in tandem with that of Euro. When Euro is gaining, USD CHF could make a dip. But if you see the pip range, and Euro gain may be about 100 pips, whereas USD CHF would have dropped about 50 pips. That way, they will try to make less drop and more gain moves in the case of USD CHF. And in the case of Canadian dollar, they already gained the levels. In order to gain more levels in the case of CHF, they will continue to do the wide range swings in the case of USD CAD from 1.05 to 1.07 range, and then subsequently, after gaining the levels in the case of USD CHF above that of 0.95, they will gain more levels in the case of CAD in order to handle the CHF CAD cross. Then Australian dollar, and you know that from 0.88 they have come to 89 area, and even though Euro and GBP made the drop, you would have noticed that Australian dollar was the one which was gaining the levels on Monday also last week, and they are expected to gain it to 92 area. And this time when they just go to higher levels, try to build sell positions. Afterwards, when Euro and GBP make a small drop, they will make a big drop in the case of Australian dollar. Keep it in mind. So these are all the expected ranges for this week. And coming to the market reading. So Euro formed the low 1.3572, and that is actually shown in the quote page, but actual market 1.3621 was the low. But the quote page shows the average they had taken it from that of the previous day close, and that is being incorporated into that. in order to show the high and the low, the players will try to make some swings during the particular time and then either break the high or the low during the day. So they are not breached low or high, but in the case of GBP, they just breached the low and 1.6394 they breached and came down to 1.6387, and they are holding around 6388. So they are likely to hold it for about 2 hours as an extended downward move, stop cutting the low, and then slowly gain the levels above the initial low. And in the case of yen, 104.17 was the low, 104.49 was the high, but they just made a quick upward stop around 4:30 GMT and then started dropping. So it has come below that of 1.0449. So they are expected to make a drop in the case of USD yen, similar to that of yesterday's move. And as I explained in the previous webinar, they are expected to make the contrarian move. That is, when Euro and GBP gain, USD CHF might gain, USD yen might gain as a contrarian move, and suddenly they will make a drop in the case of USD yen when they further rise Euro and GBP. That sort of moves they had done it yesterday, and very frequently they are expected to repeat such moves. So when Euro and GBP are gaining and USD yen is also gaining, don't simply think that they are going to continue the contrarian move and suddenly they will reverse it, and that you should be able to understand. Similarly, when USD yen and Euro GBP and USD yen are making a contrarian move on the downside, so you might think that they may continue it in order to handle the yen crosses, but suddenly they will start gaining the levels in the case of USD yen as a USD gaining move. So they will alternate the contrarian move with that of the USD gaining or USD weakening move. That you should be able to understand. You know that they don't hold the sentiment for more than 2 sessions. So if you could follow that carefully, following the market timings, you should be able to read it very well. Then in the case of CHF, 90.36 and 90.58 are the lows and the highs. They are not breached and they are expected to make a consolidation in slow gaining moves in the case of CHF. Now CHF, we can see that it is making about 16 pips positive net change. When you come across zero, it is making only 5 pips negative net change. That sort of moves they are expected to make it. Then in the case of Canadian dollar, 1.0653 was the low and 1.0674 was the high. They made the upward move above that and holding above that of 1.0674, and they are expected to make slow gaining moves here, and after making an upward stop, and they are expected to make that drop also. The upward stop might be for about 2 hours as an extended move. Then in the case of us, on a daily basis, you will come across they breach the high in the case of Canadian dollar. So when they breach the high and stop cutting the new high for more than 30 minutes, you can take a sell. When they breach the low and stop cutting the new low for more than 30 minutes, you can take a buy. You should be able to do very nice swing trades in the case of USD CAD. In Australian dollar, the low was 89.24. They just breached it. It came down to 89.12. And slowly they are gaining it. And 89.23, they are holding it. Once it comes above that of 89.24 and stay there for more than 30 minutes, then Australian dollar is expected to gain and breach the high and drop out today. This is with regard to the market reading. So if you find that when the initial lows and the highs of yesterday and today are compared, you find invariably they just made in the case of GBP yesterday a quick downward move and then recovered, and today they are simply holding it and making again a brief downward move. And yen also, they are just making a consolidation, and CHF also they are making consolidation. Canadian dollar is also, they are making consolidation everywhere for 2 days. They have just done the consolidation. and it is just only the Japanese session, and they are expected to make very aggressive moves from the European session. So as I explained that we need to follow the market timings and note down the initial lows and the highs in 4 majors and 2 commodity pairs, and when during the early and the late sessions, when the market or the respective currency pair is near the high, you can take a sell, not breach the high for more than 30 minutes, and not breach the low for more than 30 minutes, you can take a buy, and you should be able to see the swing trade opportunity within the session. But still keep 30 pips stop if the hedging facility is not available, and keep a 30 pips hedge order or the buy stop or sell stop, and then try to keep stop at entry in order to eliminate the risk once the position makes about 25 pips profit, and then try to maximize the profit. Aim for 45 to 75 pips profit. You should be able to easily get it. So as far as market timings are concerned, you'll continue to see the same. Japanese session 0030 to 7:30 GMT, 7:30 to 8 will be the gap time. They will make false move during gap time. The 8 to 14 will be the European session. 14:30 to 21:30 will be the gap time. Then 21:30 to 0030 of the next day will be the gap time. So each session is subdivided into early, mid, and late sessions by the players, not by me. And then first 1.5 hours, they just make the early session moves in the case of majors, and mid sessions they make the moves in the case of crosses, and late session again they will come to the majors. And they take only the 2 pairs at a time and try to make the quick moves in the market. So you have to identify those 2 pairs which are making more than 40 pips spread between the low and the high. Then understand there they want to make some active moves during this particular session. And especially when they are making the downward or the upward stopping, understand that downward stopping is a precursor for the rise, and an upward stopping is a precursor of the drop. With regard to the year 2014, I told you that USD yen is going to play a major role along with the yen process. Yesterday you would have noticed that USD yen, Euro yen and GBP yen made the drop of about 150 to 200 pips, and then subsequently regained most of the drops. And everybody thought that it could make an upward move, and people were thinking that the carry trade could continue, but they make further drop. So already in the case of yen process, they had dropped about 300 to 400 pips from the high they are set. So this is how the players are expected to make the move. So if you want to trade in yen crosses, you need to carefully monitor it and do it, otherwise you could be trapped vulnerably. Then Euro and GBP are expected to undergo the initial downward move, excepting this week. So this week, because of the data release, they will try to gain the levels and build sell positions. So they have to build sell positions before the drop, and then subsequently make the drop. And this drop is needed for them to accumulate buy positions before the next rise from the March. So March they will try to make the consolidation, and the trending that commence from that of May. This is time they will try to accumulate more buy positions. In the case of Euro and GBP, that they normally do it drop and buy, drop and buy, drop and buy. And people might say that I am giving a wrong forecast, that Euro and GBP are expected to rise when I say, and they have been dropping. But that is the way the players make the move. So during such drops, we should buy once they stop getting the high. And even if you are hedged, you try to book profit on the hedge side instead of doing sell and buy trade during the drop. Most of the traders who try to do the breakout trades during the drop on the downside, they just sell at the lowest level and try to book profit. And then they might make a drop and give some profit. Then they become more interested in doing sell and buy trade and increase the lot size and take more sell positions, and later on see that they are trapped vulnerably because they make simple upward spark. So don't go with that of the market sentiments. That is what I want to tell you here. And USD CHF or USD CAD are going to gain in a big way. That means CHF and Canadian dollar are expected to weaken. And Australian dollar is also expected to weaken, but before that they will try to reach some 0.92 to 0.93 area. Then subsequently make the drop in the case of Australian dollar. And I was telling you last time that regional currencies, they wanted to strengthen more during this particular year, and we should come across the strengthening move from January onwards. Already in the commodities, gold, silver, and crude, they gained the levels they are expected to gain, and probably this time again the attribute of gold as safe haven could be frequently used. We could come across the gold gaining more levels. Last year it was just making subdued moves, and they are expected to make more gaining moves in the case of gold, but not the multi-year highs, but they will considerably gain levels from 1,200 to 1,500 area. Then stock markets are to undergo corrections. Already you've come across slow corrections, and slowly they will try to build more corrections in the market. So, if you got any questions for the long-term forecast of the year 2002, you can ask me. I'll be able to explain to you. Because especially in the long-term forecast, will be useful for those who do the currency conversion trades. Otherwise, it will be of academic interest. So let me take up the questions which are asked here. Douglas has got a question. Did you say you expected the extended downward stop to 60 to 50 to occur during today's European? No, not today's. In this week. Anytime they could just visit 60 to 50 area suddenly and then reverse. That is actually the weekly range, what I have shown it. Not today. Hope I have clarified the doubt. This is the week range, 6 to 10 of January. Any other questions? If you ask me, I'll be willing to answer to those questions. Okay, fine. No questions coming forward. Okay. Shall here. This week still prefer buy and sell trade. Yeah, this week we can do buy and sell trades in the case of GBP and Euro because they already made their drop and they are expected to gain the level. Still use the hedge order because if you fail to book profit, but this week we should be able to book profit. But subsequently, if you hold it as a position trade, it might be risky. So try to grab buy and sell trade as swing trades. And George, we only know down, high and the low at 3:30 GMT. If it is down to its low, then. Now, with regard to the initial lows and the highs, I have been explaining it during that of the tracking the forex market with the webinar. That, say for example, they just breached the high in the case of USD yen and gone above that to 104.62 and then come below that of 104.49. Now they are holding it closer to that. So when they make a quick upward move and then come below that of the initial low, initial high, less than 30 minutes, we understand it is a stop point. And if they hold above that of the initial high for more than 30 minutes, then they could do it up to 2 hours. Then afterwards, we try to take a sell position because after the extended move, the intentional move will be the opposite move. So it is a question of only timing. So we try to derive the timing for which we need to wait before taking a position. Because many of the people think that as soon as you open the trading platform, we need to take the position, otherwise we'll miss that opportunity. But that is a wrong approach. Actually, you have to open the platform and wait for an appropriate opportunity to take positions. Whenever they make quick moves on the upside or the downside, watch calmly for 30 minutes. You have the time frame on the chart page, in the live market code page, and there you can find out how much time it is taking. 30 minutes over, then they stop cutting the high, take a sell near that of the new high. Then you should be able to book profit quickly when they make a drop. So when they breach the initial high or breach the initial low, in the case of GBP, they breach the initial low, as I told you, and then stop cutting the new low, and they come closer to that of the initial low. So once they breach the initial low and go above and stay there for 30 minutes, they intend to gain the levels. So here, when they quickly make a drop, you understand that it is an extended move. Quickly make an upward move, we understand it is a stop point. But the difference is stop point takes only 30 minutes and the extended move takes 2 hours. That is the only difference. It is a 24 hours market cycle. So the players need to make such moves in order to induce the traders to commit positions to start with. Because most of the traders develop the feel when they start gaining the levels, they go and jump and buy. Then they will pretend as if it is going to drop and quickly drop 20-30 pips and hit the stops of the traders and continue to gain the levels. Very frequently they do that. So if you want to buy, you have to wait for such downward quick move and then try to take a buy rather than buy to the market. And I explained during the webinars that whenever you want to buy, say in the case of euro you want to buy, then why not you keep about 5 to 10 pips below that of the current level, a limit order, a buy limit order, so that when they make a swing, you will be able to fine tune the entry and take a position. So these things are very fine-tuned method of making trades. So when they breach the high or the low after 3:30, we understand that they are trying to do the extended move or the intentional move. Then accordingly we plan on the trade. Then India has got a question. May you please explain expected trend for GBP Australian dollar? See, GBP Australian dollar is a cross wherein GBP is the numerator, Australian dollar, even though it is a numerator here in the major, it will become the denominator. So only when they make the variable swings between GBP and Australian dollar, that is GBP now, for example, it is showing about 10 pips negative net change, whereas Aussie has shown about 50 pips negative net change. So when Aussie becomes weaker when compared to that of GBP, then you find that GBP Aussie cross gains the level. Has gained the level. So you have to relate it that way and try to find out what they are trying to do it from time to time. Accordingly, take positions. So as far as the crosses are concerned, we will not be able to determine the long-term moves because the players make big moves in the case of the majors in order to bring in volatility in the case of crosses. Excepting the yen crosses wherein they go in for the one-sided gain or one-sided drop. In Grill, we expect new high of S&P 500 in Q3, Q4. No, I'm not expecting much of a gaining moves in the case of stocks. Then Karthik Raja, you said Euro and USD CHF expected to up moves, but it happens always opposite between the banks. See, many of the occasions you will find opposite moves. Again, I explained it that Euro is showing 2 pips negative net change, whereas CHF is showing 14 pips positive net change. There is a variation. So you have to fine tune your understanding by seeing how much of net change will come across. Then Euro Yen. Euro Yen is on the downside move now. So every quick rise, you can take a sell when they stop cutting the new high for more than 30 minutes to 2 hours during mid-sessions. Jawed Dilber, can you show the day-wise focus? Sure. So no more questions. I think time is up. Thank you, Jawed. And from next week, the drops are expected. Yes, Euro and GBP are expected to make the drop from next week. For a short duration, as I explained, that the gains take a longer duration when compared to the drops. This is the expected market moves. Anyhow, this webinar is being recorded and it will be displayed in fxtrade.com under the webinars, archived webinars. So you can refer it at any time of your convenience. I will also try to give the link at fxtrade.net so that you can click the link. Once the recording is uploaded, I will try to display the link in fxtrade.net and also in my blog page, irondesis.com/blog. From there, you can reach the recorded webinars and try to go through that. If you got any questions, you can ask those questions there. I'll be willing to answer because I'll be frequently, when any question is asked, I'll be receiving the question by email. So I will certainly answer that as quickly as possible. So once again, I wish you all very happy new year and wish you all prosperity and earnings during this new year. But try to see that you don't become emotional, try to control your emotions. Will be really well placed in the market. Now GBP, they gained above that of the initial low, 63.94, and if they sustain here for about 30 minutes, it's a great buy opportunity. We'll come across the gainings. Okay, thank you one and all. See you on Thursday, that is 9th of January, day after tomorrow. Today is Tuesday. Thursday I'll come back and review the forecast, what I have given it. And also explain to you on Thursday and Friday what sort of fine-tuned moves you could come across in the market for DOE, ECB decisions and also non-farm payrolls. Thank you one and all. Wish you all happy trade.